Well, it is a very busy day on stock markets in North America and around the world, as we just told you. Let's talk about it now with an expert. He's Andrew Pink, a portfolio manager at LDIC. Andrew, thanks a lot for joining us.
Thanks for having me.
What's your take on this U.S.-China news? The market is euphoric about it. They think this is the beginning of the end of this trade dispute. Is that too much to ask for?
I think it's a little too soon to call that. We're going to stay a little bit more defensive. I know we knew that these headlines were certainly a possibility and a high likelihood that we'd see, this is, one of these announcements it kicks the ball down the road, but there's no real resolution. I think it gives the market a little more certainty that it needs. Mm-hmm. But I don't think it's a resolution quite yet. You
don't think U.S.-China talks are headed in the right direction?
I think they're headed in the right direction. Mm-hmm. I think the market's obviously absorbing that today, but whether or not we'll see finality here with the two countries, and whether or not this actually achieves the objective that Trump has right now, which is to bring manufacturing back into the United States. I'm not sure that, it wasn't the fentanyl. Is it really about bringing manufacturing back, or is it about, Trump getting a win? So I'm not entirely sure that it achieves exactly what he's looking for. So,
are there reasons for Canadians to be optimistic that the U.S. policy on trade writ large is softening?
I think for sure, yeah, and you're seeing it again. I mean, we saw a really healthy open. It's fading a little bit into the morning hours here, but yeah, I think there certainly is, some reason to be a little more optimistic. And as I say, certainty is a really good thing for markets. We haven't had that for a while. This brings a little bit. Okay, let's talk about the Canadian economy. You believe that the Bank of Canada will continue cutting rates as its focus remains on growth more so than inflation. Yeah, this is something that we're a little more certain on. So we see another 2, maybe 3 quarter-point rate cuts by the end of this year. And then that gets us down to sort of the low 2s. And then next year, maybe a couple more. So we get into the high 1s. And that really sets the stage for interest-sensitive investments to do well. Mm-hmm. Such as? Such as our preferred shares, fixed income. Anything with a yield component really does better in an environment where the central bank is ratcheting down that risk-free rate. Okay. The bank has said several times we can't stimulate growth and tame inflation at the same time. Correct. A stagflationary scenario is a difficult one for us to operate in. And the bank has also said the extreme trade tensions with the United States pose that possibility of both suppressed growth and stimulated inflation. Yeah, it's true. But we have seen inflation very contained in Canada. So we've seen sort of high 1s, low 2s since July of last year. So we say that's fairly well contained inflation. The economy may be struggling along here a little bit depending on what happens with tariffs. But ultimately, we see the bank having to lower interest rates. We're a very interest-sensitive economy, as we all know. We've got a big, Canadian mortgage situation where, 20% of mortgages roll over every year. That's just a matter of fact. And the lower we can get those mortgage rates, the better the economy and, the more growth we generate. So I think the agenda's in place. Inflation's reasonably well contained. So we can continue on this path to cut rates. And actually, the Canadian dollar up until today had been strengthening as the U.S. dollar was weakening, that relationship. So that's one of the things that the bank cares about is, our purchasing power internationally. That's held up reasonably well. So we're sitting just under 72 cents, the way I look at it. What would you like to see, or what do you think Canadian investors would like to see tomorrow in Ottawa when Mark Carney's cabinet is announced? I mean, let's hope for a decent formation, and I just think more stability. Like I said recently, the stability that we have in the government, the federal government here, is a good thing for investment. That's what we need. We need a good federal, solid government where we're not looking at an election in the near term. I think both those things are in place now. It's a minority government, so maybe we'll see some conservative agenda items get across the board. But I think markets are better off where we have a stable federal government and we have more international money coming in for investment purposes.
We will show viewers a conversation with Drew Fagan. He's a professor of international politics at the Monk School at the U of T. He makes the point in that conversation that the Canada-U.S. file will be very active over the next 6 or 8 months or so, including a renegotiation of the CUSMA agreement. What do investors want to see, and how quickly do they want to see it on that file?
Yeah, I guess along the same lines, they want certainty. So we want to see some stability in trade agreements, including that USMCA or CASMA. So I think if we start to see that, then yeah, more confidence means markets can go higher, and investors are willing to pay a higher multiple for stocks in that scenario.
Okay, let's finish out this conversation by going back to where we began it in today's big market reaction. What's your view of these growth stocks, these tech stocks that are soaring today? What's your positioning in that sector, and what's your advice to investors?
Yeah, it's a good question. We have been defensively positioned since Q4 of last year and leading up to Trump's inauguration and this potential trade war. So we don't invest in anything that's ultra high multiple. We're quite conservative. So we're missing the big rally in stocks like Shopify today. But we'll take a little underperformance on days like this to be a little more defensive, have a little higher allocation to fixed income, and be in defensive high market cap stocks with low multiples.
It's the first portion of our conversation with Andrew Pink. He's a portfolio manager at LDIC. We'll be back.